Hello and welcome to Uncovering Real Estate, a new show brought to you by the Brampton Real Estate Board. I'm your host, Sarabjit Rana, and it's great to be with you again, as always. And we're going to get right started with the show. I've got with me today Peter Puzzo, who's mortgage broker from Dominion Lending Centers. Hello, Peter.
How are you? Thanks for having me.
Thanks for coming in.
My
Appreciate
pleasure.
that. So we've got a lot of chatting to do. When people hear the term mortgage broker, they think of many things come to mind. We know what our traditional mortgage broker is, but in terms of your point of view, I want you to tell me how your role has began and how it's been defined over the years as a mortgage broker.
Right. So I started brokering in 1999.
Okay.
And back then, it is quite different than what it is today.
Right.
Typically speaking, the consumer would walk into their bank. If the bank said no, they would go look at a mortgage broker and see what their options were. Today, over 50% of new mortgages are being brokered through mortgage brokers. So we're becoming the first point of contact and not just the lender of last resort type of thing.
Okay.
So basically we have someone who's going to buy a house and they want to know what their options are. It's not what they do every day.
Okay.
Mortgages are somewhat complicated. They can be intimidating at times.
Sure, they sure can.
So that's our role, basically, to work between ourselves, the client, and the several institutions that are out there to find a product that best suit the client's needs.
So it's interesting you say that because we know the role has changed. I mean, not me personally, but it's in terms of the conversations you have with people, somehow felt that a mortgage broker becomes the person you go to when the walk in the bank isn't optional.
Right.
Right?
Yeah.
RBC says, oh, well, you need to fix this, or whoever it may be, whichever other bank we're talking about. But then I go to a mortgage broker because I need help. Is that still the case?
Definitely not.
Okay.
So, like I said, over 50% of new mortgages brokered today are through the mortgage broker channel.
Okay.
So, technology and information is much more available today thanks to the internet than it was maybe 20 years ago.
Sure.
So, consumers now can Google, mortgage rates or mortgage brokers and find their local broker and compare the service and knowledge that they might get from their broker to that of what they would experience at a branch and make an informed decision.
So, okay, so those are interesting points that you make, because even though I can go into the branch and we've substantiated that, what is the benefit of me to call you, Peter, and say, Peter, I need some help and I need you to get me the best possible mortgage rate, rather than walking into the bank myself and doing it? How are you going to help me make it work?
Great question. So two different main points. Number one, we have large amounts of volume that we would deal with specific lenders that get us preferred rates.
Okay.
So the biggest advantage really is you walk into your bank, whichever bank that may be, they're going to sell you or try to sell you a product from their specific institution.
Sure.
It makes sense, right? You're never going to have an employee from, call it TD, say, go to RBC, they got better rates, right?
No, can't happen.
Not going to happen.
No.
So our job, really, the biggest advantage is we don't have a loyalty to a specific institution.
Okay.
We have 15, 20, 25 different lenders to choose from.
Okay.
And my job is not only to get you a preferred rate. That's not everything. When we buy a car, we don't just buy the base model. We typically buy one that has some options. And sometimes you got to pay for those options.
Right.
So my job is to say, you know what? Here's option one, here's option two, here's the benefits or pitfalls of each, and then basically put you in a position as a consumer so you can make an informed decision.
Okay, that's important, because I want to come back to that in a second. Because when I think mortgage, and how many people would you say, percentage-wise, have mortgages now, like in today's day and market?
Wow, that's a great question. I don't have those statistics on hand. I'd love to know what percentage of the population are homeowners. And then a specific percentage of the homeowners might be mortgage-free if they've owned homes for 25 or 30 years.
Right.
Like, for example, maybe our parents' generation.
Yes.
That's certainly not the case in our generation.
No, it's not. Not
we
yet.
definitely lead different lifestyles. Not yet. Well, we'll get there.
Absolutely.
But I don't have those stats on hand.
Fair
but
enough.
I would say it's got to be at least 30 or 40% of the population.
Okay. So when we're looking at mortgages, we've got either a variable rate or a fixed rate.
Yes.
Right? So my standard layman understanding of that would be, okay, variable is exactly that. It's a change all the time. And then a fixed rate is, here it is, it's 3.74, and that's what it is.
Right.
So what's the difference, and what should I go with if I have a choice?
Great question. Again, that's part of my discussion with my client. So I often use the analogy of, mortgages are like clothing. It's not one size fits all.
Okay.
Right? So I don't just give standard advice to every person that calls because everyone's risk tolerance is different.
Yeah.
And the last thing you want to do is lose sleep at night because you're in the wrong mortgage product. Now, historically, the variable rate has outperformed the fixed,
Okay.
where people that have gone variable have done extremely well.
Oh, really?
Very well. In the last 5 years, we have hundreds of clients coming up for renewal that have been below 2% for the last 5 years because we've gone through unprecedented times where the Bank of Canada, up until very recently, didn't change rates for 5
Right.
years because of global economic conditions.
Okay.
So when I have those clients coming up for renewal, they're like, Peter, what's the best variable rate? And I have to have a conversation with them and say, wait a minute. The variable rate did very well, fluctuates, but today, maybe the way to go is fixed because the rates have never been lower. So a variable rate is basically one that fluctuates, not to get into a long-winded discussion.
Yes.
The Bank of Canada determines what happens to the overnight lending rate. The
Okay.
Bank of Canada makes 8 decisions per year pertaining to the overnight lending rate. Historically, the major banks would follow suit
Yeah.
with any change in the overnight lending rate. So Bank of Canada drops overnight lending rate by a quarter point.
Yeah.
The banks would drop their prime rate by a quarter point, and in turn, your variable mortgage rate would drop by a quarter point. However, the last couple of times that happened,
Yeah.
our friends at the major banks have not passed down the entire discount to the consumer.
Oh.
They've held some back.
They haven't felt motivated to do that.
They haven't.
I see.
So
Okay.
again, that's part of the conversation. So
Okay.
when I advise a client on variable versus fixed, I first analyze their specific risk tolerance.
Yeah.
Once I have that figured out, then I say to them, look, you're going variable. You're taking a chance. You're taking a risk.
I want you to hold on to that thought because this is an interesting discussion. I want to go to break and then I want to come back and we'll continue.
Awesome.
Okay, thanks. We'll be right back.